consumers are pulling back, and it's a reflection of the fact that excess savings are gone, real incomes are below real spending, and people are levering up and paying a lot of interest on their debt.
Yeah, and Paul, this is what surveillance is about. We like the difference of opinions. We don't have an opinion, but we're going to listen to those more optimistic and those like Dana Peterson, sub 1%.
Exactly. So Dana, talk to us about the consumer out there. Essentially, the consumer wants a job. He or she has a job. Wages are increasing. How do you see the consumer here today?
It's really mixed. Consumers are saying, yes, I'm working. I like that. My finances are okay. The present situation is fine, but they're still complaining about elevated prices. Eggs are $8, bread's 10, and they're also more concerned about the future. Their expectations for the labor market are starting to erode a bit. They're concerned about their incomes. They're also very concerned about business conditions going forward. And we're seeing this tug of war, and it looks like expectations that are weakening are starting to take over a little bit in the numbers.
So where are we going to see that? Are we going to see that where are we going to see weakness in this economy if it does, in fact, accelerate to some degree? Will it be in the labor market? Will we see unemployment kind of inching above 4%?
Oh, we think the unemployment rate could tick up to maybe 4.2%, but that's really low, and that's still a pretty good labor market. Yeah. I think the thing is that consumers, if the Fed sees that consumers are still working, but they pull back on spending, and that helps cool inflation, that's a perfect scenario. It's when people start losing jobs. I think that's when the Fed gets really worried and might accelerate interest rate cuts.